Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. So let's jump into the news of the week, Nick, starting with MotorK, automotive SaaS platform raising 5 million debt facility from Atempo Growth. So, interesting for two reasons. MotorK has been a player for a few years and it's been definitely growing. So kudos to the people. Basically, they're trying to connect automotive manufacturer with the reseller of cars. Very interesting way to digitize a very old business, actually. So that's first interesting point. The second part is the venture debt part. So Atempo Growth. So here, let's spend maybe a few seconds talking about how exactly venture debt is and will probably play a big role in the European ecosystem in terms of funding. What's your take on that?
Well, this is an interesting point, actually. Ciao, Jack. Venture debt was absolutely a thing when the cost of debt was low. So, still, again, it's a matter of, zero interest rates. So it is possible to put out debt instruments that have a reasonable cost. It was a thing. It seems it is still a thing. Not last because I'm not so sure that banks are willing to keep their central role in being the key lenders in an economy. And I'm not sure they want to lend to startups, even though MotorK is not. Can we call it a scale up? I think we can. Mm-hmm. It's a public company. It went public last year or in the last couple within the last couple of years. So it's a mature company in a sense. So I find it interesting that this mature company, public company, resorts to such a tool. And they believe in that phase, it's absolutely something normal to use that to finance growth projects or whatever you need that for. It makes sense.
So maybe that's probably what is going to help solving the conundrum of a European startup to actually be funded beyond the Series A and up. We always talk on how there is like a little bit of a gap. And I agree with you, like banks, the question is whether banks are ready to do that. So let's talk maybe about Atempo really quick, because I think probably that's kind of the kind of dynamic that needed to be fostered. So Atempo is focused on growth lending, which is pretty much another term, and then correct me if I'm mistaken, for venture debt in a way or another. They focus of rounds from Series A to pre-IPO, and basically they're minimally dilutive. So this is basically purely like lending dynamics or quasi purely lending dynamics. They closed their first fund in October 23, so literally last month, 200 million, which is backed by the European Investment Bank and Bank Santander. So maybe that does the trick. So where big banks, which are highly institutionalized and not really well versed into the startup ecosystem, kind of using this tool to actually approach the market of late stage funding. So maybe that's the angle.
Looking at the news, last year Santander acquired 30% of Atempo. The bank has provided some solidity in a sense to the cap table of the company. Yeah. That's interesting because the bank is investing in the company, providing a very specific debt product to the market. So this is something that goes back to what we were saying. I don't feel confident in providing debt facilities to this type of company. So let's acquire, let's invest in the folks that know how to do it. Yeah, that's interesting.
Basically that's maybe one way to outsource a function, which is a little bit on the higher risk and in the innovation side of banks. So that's how they can feel more comfortable. And another probably consideration.
Remember, Jack. Risk-weighted assets.
You're
putting that thing, further away from your balance sheet. Even though, 5 million euros, 200 million euros in the balance sheet of Santander is like nothing. It's like someone
Correct.
sneezes
Absolutely.
and that's 200 million, but still risk-weighted assets.
Yeah, it's like allocation-wise is thinking about percentages in alternative highly risk assets. Yeah, totally true, totally true. Well, the lending thing though feels a lot like much European than kind of a European vibe than the US vibe. So you don't hear much in the US about venture lending. European, this is like kind of a beast that is raising in the European ecosystem. So maybe that's how exactly we're gonna track the growth. So why not?
And that's an interesting point. That's an interesting point. Well, I mean, equity was so abundant. Returns on equity were so interesting in the US, probably that nobody really thought about that. I don't know. That's an interesting point. Is this something purely European?
Maybe. It's culturally adjusted venture capital.
Well, going back to MotorK, I was taking a look at the latest news, and they announced like 18 days ago they were shifting from loss to profit, and the markets were happy. So the stock price like raised quite a bit. I can't say that almost doubled, and plus 70%, something like that. That's interesting.
Awesome.
And that was probably something preparing preparing the space for announcing and for the tool. Very interesting.
Super cool. All right, so moving on, let's talk about the European Innovation Council Accelerator, basically providing funding to 3 Italian startups / scale-up, the Orbit, 3B, and Nano-Tech, all in some ways working in the technology like related to the space industry kind of field. Basically, what is interesting here is that the EIC Accelerator basically has been funding a lot of companies across Europe. There is always like a list coming out basically of the new funded company. And this is like probably one of the most important accelerator, I would say, from the European Union. So that's definitely like something to notice. They mostly focus essentially on two kind of financing. So it's going to be basically they go up to 2.5 million in grants, which are fully non-dilutive. Of course, once they are approved and they go through the different hoops. On top of that, once they reach that stage, company can access to up to 15 million of equity or quasi-equity or even grant again or a mix of those for scale up, basically that need to ramp up operations. What is interesting here is, of course, this kind of like a different like stage structure. And at the same level, the fact that basically they're basing their decision making a lot on the TRL system. So that definitely tell us that somehow they borrow this framework from the aerospace. So they're probably like that's where they want to focus a little bit. And yeah, so grants start at TRL 5 to 8 and essentially up to 9. So that's an interesting point. They don't limit themselves to the accelerator part. They have 2 different budgets for what they call challenges or EIC open. And it's basically 500 million for the challenges and about 613 million for open, which are a small independent program that actually can allocate beyond the accelerator. So a quite wide structure with different like entry point for funding.
Yeah, it's probably the one of the major European grade tools for raising capital. The basic idea which they had, the European Commission had to launch the accelerator was to try to fill a market failure. The idea was we've got investors in Europe, but they're not really taking risks in deep tech areas. So that's the reasons why they are focusing on TRL 5 to 9. In deep tech, the expectation is that up to TRL 4, you have the universities, the research center networks the local budgeting, granting ecosystems that are able to take technology up to that level. And then the European Commission says, hey, if you are unable to raise private capital, we can support you in financing your technology, your research, your innovation in order to bring it to the market. So the idea is we are a market preparation type of funding, not an R&D type of funding. So that's why they're focusing on that type of scale. And on specific technologies. So things that are, in their opinion, of course, not fundable by the private capital ecosystem.
Awesome. And that probably leads to the other consideration that I had about the TRL system, which, it's something, again, like peculiarly European in some way, but actually the origin of the system is from NASA. And reading about that, basically NASA researcher Stan Sadding in 1974 basically devised this system to actually classify different aerospace projects within the agency. The first time that the TRL system was used basically is to present to the board of NASA the Jupiter orbiter. So the head of the project, together with this researcher, they came up with this system, and from there it was developed. Fast forward 2013, the system is standardized as an ISO standard. And the ESA, the European Space Agency, is adopting it currently to actually rank different product. And they even issued a TRL calculator that you can access online to actually rank your project. So that's pretty interesting. I've heard a bunch of investors actually using the TRL system for their sort of investment checklist. So it is something that definitely has left a mark in the technology and early stage sort of investment, maybe in specific verticals. My feel is that sometimes it's kind of used inappropriately in other sector, but yeah, it's definitely something worth noticing. What is your take on the TRL system, Nick?
Well, we don't use it, so I can't say I'm an expert in using it. So, I mean, I'm aware of its existence and its use in certain specific areas. I believe our space team somehow takes into account the TRL of the technology when investing, in particular when there is hardware. When you have a physical product that has a very specific path to commercialization, and where probably the steps fit into the TRL model. I mean, you're in the lab, then you are outside the lab, the prototype, and then you explore the solution with the customer, so on and so forth. Software, I believe, I'm no expert, but software kind of went beyond the TRL system, basically flipping it on its head. With software, you can prototype so quickly that you are in the customer's premises, from day zero potentially. And the product literally grows within the customer's premises. So even though it might be valuable to apply the system software, it kind of is not usual. It's not something that is commonly used that I see that I'm aware of.
All right, let's talk maybe about the two new players in the ecosystem. Basically, let's talk about the Benetton family launching his first 30 million vehicle to invest in early stage product, mostly focused on B2B startups in fintech, SaaS, and climate tech. We're talking about 2,100 ventures, 30 million under management essentially. They're focusing on tickets between 250K to 750K, pre-seed to Series A. Generally with a European angle, but focus on Italian founders. So that's interesting. And they're pushing toward 1 to 5% stake in the company. This is interesting, good thing to see new player coming in, and definitely a big step for like new investor actually, also adopting a more like European way of thinking about investing.
Yeah, I believe this is good. This is additional capital. This is the player with financing ability. It comes with a network attached. So, I mean, it's a very important, very famous family office. They built a professional team dedicated to the vertical. So kudos to the team, and best of luck for them going to the market. It's a good timing because it's probably good timing to invest capital now in the startup market, because you can find the work with exceptional founders without all the noise that you had a couple of years ago. So very happy about them. I'm very happy for the Italian ecosystem. So good.
Let's talk about Generali, basically launching his own venture unit. What's your take on that?
All right. Well, this is not the first venture unit launched by Generali. There was another one launched a few years back, A8 Plus. This is another vehicle, I believe not related to the A8 Plus, focused on direct and indirect investment in the European ecosystem, at least, if I understand it right. 200 million under management, from, I don't know whether fully from the Generali balance sheet, I believe so. They launch announcing 3 limited partners participations commitments to 3 very, very strong, I would say, tier 1 funds from across Europe, Speedinvest, Mundi, and Dome Capital. So very good. I'm looking forward to see them investing in some Italian player, even though I understand that they are focusing on their vertical, and there are not many vertically focused Italian investors here. But still, it's a good injection of capital on the market. So good to know and good to have an additional player, a big player going directly into the market. What do you think?
Yeah, no, definitely interesting to see like how exactly they want to focus and specialize in this kind of investment. And yeah, I mean, insurance company together with banks are probably some of the quickest, corporates to adapt, and actually one of the quickest to actually enter the market. It's easier for them maybe than other kind of industries, but yeah, definitely good news if new player come in. All right. Last interesting element. Let's talk about the empirical study about the pitch deck analysis through ML, trying to correlate words used in pitch decks with the likelihood of raising capital. So that was very, very cool, because beyond some intuition that usually people have about deck, where you need to include academic study, advisory board, and other cool thing. Basically, what matters is a runaway calculation and pricing strategy. Then this is it, guys.
Remember, first of all, this is a study, a research based on the a few thousand pitches received by this fund, published these results. And remember, correlation does not imply causation. So it's just a matter of seeing that some things correlate. And it is interesting what does correlate with funding and what doesn't. So take a look and think about it. Ciao, Jack. Take care. Ciao, everybody. See you in a week.